Jitendra Bhargava, former ED Air India, as well as Kapil Kaul, CEO South Asia, India Subcontinent, Centre for Asia Pacific Aviation, is with us on the show. Well, gentlemen, great to have you on board. Mr. Bhargava, I'm going to start off with you. We have seen the higher airfares in Jan and Feb, despite Q4 being usually leaner. Ticket prices have been steeper, not only in several metro routes, but other areas as well. So how is it that when ATF prices have, how is this, phenomenon occurring according to you when we have seen ATF prices on a correction over the last few months?
You see, we shouldn't forget the fact that for too long have airlines, because being in a competition mode, have been charging fares which have been much below the cost of producing seat. As a consequence, they were either making only marginal profit or losing money. As your correspondent very rightly said, that the low-cost airlines fares are quite akin to the full-service carriers, so they've been losing money. So in my opinion, it's a very healthy correction that is taking place, because you cannot be stimulating the market on the basis of lower fares and therefore impacting the financial stability of airlines itself. So airlines, in my opinion, have been sensible enough to put an end to these ridiculously low fares being offered in the market, just to stimulate the growth. And we shouldn't be forgetting the fact that this is all being driven by airlines' interest individually rather than the overall aviation industry interest. Because a large quantum of induction of aircraft is in the offing. Last year we added over 100 aircraft. So if you keep adding aircraft, airlines have to fill up their aircraft, so they keep stimulating the market, impacting the financial stability of airlines. We know Air India losses. We also have come to know about the Jet Airways losses and the existential crisis which is facing. Similar will be the case with the other airlines, unless there is a modicum of sensibility deployed by the airlines that we can't be selling our seat below the cost of producing a seat. Now that is the reason why the fares have gone up. And of course, it's also because Jet Airways has grounded 13 of its aircraft, non-payment of lease rentals. Indigo has been facing some problems with its pilots, therefore cancelling flights. And there's plus a couple of runways that major cities have been under repair and closure for certain hours, etc. They've all been contributing factor. But my final take is that it's a very sensible move on the part of airlines not to get into a mad scramble to get market share at the expense of profitability. It's a healthy sign. People will have to live with it. But because we've been accustomed to a phase where fares were ridiculously low, so they've got accustomed. So any increase in the fares now has been called as either cartelization or airlines charging fares which are way too high, etc., etc. But from an airline perspective, it's a healthy sign.
Kapil, just want to get you in on the discussion as well. Have Jet's woes enabled other players to exploit the opportunity, as was seen in 2014-15 when SpiceJet was on the brink of, resurrection by Ajay Singh? Is airfare setting that dynamic, would you say? Kapil?
Atmosphere create hota hai aur
Hello? Hello?
Kapil?
Yes, can you hear me?
Yes, I can. Go ahead. Did you get my question, though?
Yes, I got your question.
Okay, go ahead.
So, Jet's contraction, if you look at the first 9 months...
Did you just play
It's been about 8% of the capacity contraction. Obviously, in the last few weeks, they had more flights grounded, but the capacity contraction at Jet has not been so significant. But if you look at the capacity contraction by Jet, Indigo Go Air has significant planes on ground because of the NEO challenges. Indigo has aircraft on ground and some scheduling issues with respect to the pilot shortage. It is a combination of factors that the domestic capacity has not been as aggressive as they normally has been for the previous few years. So that's one factor. Second is, Mr. Bhargava rightly said, the runway recarpeting and maintenance at 2 major airports has pushed fares because the flights had to be rescheduled. And the demand continues to be very high. So obviously, if you're contracting capacity on those routes, you would have peak periods significantly expensive, especially as we move the booking curve closer to date of departure. But overall, frankly, it's too early to say that airlines have reverted back to a very sensible fare regime. Yes, Q4 has been surprisingly good compared to YOY basis, even compared to November, December. And coupled by the fact that fuel has dropped 25%, especially if you look at January and February. So I think the Q4 has been better, surprisingly. and there are a combination of factors. Capacity contraction of jet. You had significant planes on ground for Go because of the Neo problem. Indigo had challenges with pilot issues. We have not seen significant inductions by Vistara and AirAsia. Air India is not expanding in domestic. So there's a combination of factors. Plus you have a runway challenge at these airports. More important, I think the first half of this fiscal was a disaster for these airlines. And even Q3, I saw profitability challenges. We expected better results, say from Indigo or even SpiceJet. The results were short of expectations. So I think there's a combination of factors that airlines have taken a more rational approach towards pricing, but that has also been driven by circumstances which are not directly related to their decision making. Overall, I would say too early to say whether a sensible fare regime has returned. We will have to see next year. But overall, when we released our outlook, we were expecting the domestic market to contract from closer to 18-20% to about 14-16%. That was on the assumption that Indigo's capacity inductions will be 30% on international. Now we are hearing the capacity induction on international.
Mr. Bhargav, we've seen previously also that weak players have gone away and strong players have come in. That's been a 2009 and 10 kind of a scenario where we saw a complete breakdown in SpiceJet and Go Air was struggling, Jet also was struggling. But that time also fare did not go through the roof, because the minute fares they go through the roof, you have the aviation ministry, and the aviation ministry comes out with some indication this or that prices cannot go up beyond the point. So do you think in India the aviation sector may be an important sector for a growing economy like India, but this is one sector which will always be lacking pricing power on the cost side and also on the ticket side?
If we look at it, we know that India is a price-sensitive market. The costs are high, whether it's the airport charges, whether it's the sale tax on the aviation ATF, etc. So there has been a factor, a growing demand, I would say, from the airlines who have been saying that there is a need to reduce the cost of operations. On the other side, you have the price sensitivity. Now, as we are witnessing that the growth rate from 20% plus has already gone down to about 15% now. Now, there is a rationale behind this factor of relationship between fares and market growth. Now, there is no reason why you must be stimulating the market artificially by offering lower fares and ultimately harming the airline's future. Now, what happens if an airline is to shut down and collapse? Not only do you get into unemployment, you get into aircraft leasing, rentals not being paid, and of course, the government on its side, whether it's the parliamentary committee or the government, the charge of cartelization is immediately thrown in that airlines are doing it. Now, the reality is that airline industry is such an industry where you can really work out the cost economics as well as the profitability that we're looking at. 3 of the airlines are listed companies. They declared the quarterly results. We know that they're not going to be making bumper profit because they're the passengers, etc. It isn't the case. So there is a weakness on the part of the airlines that they've not been able to come forth and put across to the general public that these are the cost dynamics that you operate under, and these are the kind of fares that you need to have. And of course, airlines are also guilty of the fact, take the recent Srinagar case or the other kind of emergencies that take place when they jack up fares beyond any kind of reasonable limits. Now that is where the government comes in. I am a strong supporter of it, that airlines need to be told where the social responsibility must begin. They can't be fleecing passengers when passengers are in distress, etc. But when you really look at it, in the normal environment, airlines have been artificially stimulating the market through low fares, which has been suicidal. Now, I would tend to agree with Kapil that it may be a little too early to come to a conclusion that wisdom has finally prevailed on the part of the airlines. But the reality is it's a very healthy sign, I would say, that they have to understand the economics. You cannot be charging low fares just because you placed a huge quantity of quantum of orders for new aircraft and you're going to be inducting and you're looking at the future, that I can't be reducing my market share, which may impact induction of capacity in the future. Now, is it the way to work about it? We know we are working in a commercial environment. There is total freedom for the airline to take. But if you really look at it, there is something called national interest.
Mr. Bhargava, we're going to leave it that just dangerously close to our obligations in terms of commercials. Appreciate your time. Thank you for joining us.